How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about trademark risk. I came across a very interesting study done by the Federal Reserve Bank on trademark risk that I wanted to share with everyone. So this is, and I'll kind of zoom in here for a second here. So this is from the Finance and Economics Discussion Series at the Federal Reserve Board in Washington, D.C. This is titled Trademarks in Banking. It was written by Ryuichiro Izumi, Antonis Kotidis, if I'm saying that correctly, and then Paul Soto. And let's see here. So we're going to go down to the abstract here. So what they found was that 1 in 5 banks in the United States share a similar name. This can increase the likelihood of confusion among customers in the event of an idiosyncratic shock to a similarly named bank. We find that banks that share their name with a failed bank experience a 0.5% drop in transaction deposits relative to banks with similar characteristics but different name. This effect doubles for failures that are covered in the media. We rationalize our findings via a model of financial contagion without fundamental linkages. Our model explains that when distinguishing banks is more costly due to similar trademarks, depositors are more likely to confuse their bank's condition, resulting in financial contagion. So, in other words, I think what brought this about, this was written just a few months ago. It came out on May 23rd, 2024. So this came about because of the bank failures from early 2023. And what happened there was you had First Republic Bank, which was a very large regional bank out in California, got in trouble. But then on the East Coast, you had Republic First Bank, was a small, kind of small bank over here, about $6 billion in assets. Interestingly, both banks did end up failing, but the Republic First Bank on the East Coast ended up having some minor issues, but still problems because people were confusing it with First Republic Bank out there on the West Coast. So people were coming in like, oh my gosh, I heard you guys were failing. What's going on? Do I need to get my deposits out of here? Everything else. They had to go into kind of panic mode, put out a press release to their customers basically saying, no, everything's fine. It's a totally different bank, but it brings up the interesting question. Like some of the common bank names around the country, like Citizens Bank, First Citizens Bank, Commonwealth Bank, things of that nature. There's a number of very commonly used bank names. And that question becomes like, if these other banks happen or something happens to these other banks, like they fail or they have problems, does that get related back to you? Kind of like guilt by association. So I'm not going to bore you to death with all the things in here because there's a lot of, obviously it's your typical research study with a lot of numbers and other things in there. But we get into kind of the introduction, where it basically just says like a trademark is a sign, logo, sound, or color used by a firm to identify a product or service. Unlike a patent, which is a property interest held by the proprietor, trademarks create distinctiveness. They convey information about the quality of a product or service, even when quality is not observable. As such, they help resolve an information asymmetry problem. Due to their ability to convey information, the law protects the owners of trademarks from the use of similar marks. Consumers may also benefit because owners may be incentivized to deliver a higher level of quality consistent with theories of trademarks as tradable assets. A firm's name is the most important trademark. Despite extensive legal protections, it is not uncommon for firms to use similarly sounding names. The use of similarly sounding names, however, can increase the likelihood of confusion among customers if a similarly named firm experiences stress. This issue is probably more acute in the banking industry, where spillovers to the system as a whole are more likely due to banks' role as liquidity providers. Several cases of runs on banks that have similarly sounding names with banks experiencing stress provide a useful illustration. For example, following the rescue announcement of the San Francisco-based First Republic Bank on March 17, 2023, the stock of Pennsylvania-based Republic First Bancorp plunged by nearly 30%. This marked Republic First's worst single-day performance since 1994, despite assurances by the president and CEO of the bank that amid everything going on, Republic Bank would like to make very clear we are Republic Bank Inc., and we are not First Republic Bank. Other banks, Signature Bank of Arkansas and Signature Bank of Chicago, released similar statements after Signature Bank of New York showed the first signs of stress in March of 2023. On July 25th, 2008, following the closure of First National Bank of Reno, Nevada, the First Heritage Bank of Newport Beach, California, by the Office of the Comptroller of the Currency, the president and CEO of Heritage Bank of Reno, Nevada, spent days assuring customers who saw the name Heritage in the news that his bank was financially sound. So you can see how this can become an issue. But okay, let's get down to the conclusion. I want to skip down here. Okay, conclusion. So our paper sheds light on trademark risks within the U.S. banking sector over the last 2 decades. By analyzing the names of U.S. banking institutions, we observe a consistent decline since the 1990s in the number of banks with similar trademarks. Despite this trend, though, we find that approximately 1 in every 5 banks remains heavily exposed to trademark risk. When banking was primarily a local business, this exposure might not have posed a significant threat, as it did not lead to confusion with other institutions. However, with the advent of the internet and branch banking, the potential for consumer confusion and the subsequent exposure to trademark risk has increased. Though difference regressions, we show that sharing a trademark with a failed bank results in a 0.4% decrease in transaction deposits. This suggests that certain depositors exhibit a level of caution when faced with potential confusion or association with a failed bank. Our findings rationalized by exploring depositors' incentives when the similarity of trademarks increase the cost of distinguishing between banks. When it is costly for depositors to differentiate between banks, they choose to allocate less attention, resulting in less precise signals. In such a case, those who receive a good signal may still retain substantial doubts about their bank's asset quality, thus maintaining some incentive to run on the bank. This remaining uncertainty or confusion can escalate concerns among those who receive a bad signal, amplifying their incentive to run on the bank due to a perceived greater first mover advantage. Thus, the similarity of trademarks creates a contagion channel through depositors' confusion, even in the absence of fundamental linkage between banks. The concept of likelihood of confusion in trademark law plays a crucial role in establishing trademark infringement or harm. With numerous banks sharing similar names, the potential for confusion among depositors regarding which bank is under distress can be of significant concern. Indeed, proving likelihood of confusion in courts can be an intricate and challenging task. We hope this paper motivates further research on measuring and mitigating the risk caused by shared names in the banking industry. So, again, I thought this was really interesting because I think a lot of banks could benefit from this by thinking about, what are our trademarks? What is our bank name right now? How many? Just do simple searches. If our name is Citizens Bank, how many banks in the country are named Citizens Bank? Are there other banks within our peers, like within our category? In other words, if we're a $10 billion bank, how many other $10 billion banks out there are named Citizens Bank? If we're 10 billion, but there's a large regional bank, just like in the case of First Republic Bank versus Republic First Bank, one was a large regional bank that had, I think, 150 billion in assets. The other one was a $6 billion bank. So understanding those dynamics out there, what's going on, and then perhaps considering, should we change our name? Should we change the name? A lot of banks over time, as they go through mergers, as they get bigger, they decide, because a lot of banks have a tendency to choose a name that may be representative of their town, their county, maybe something historic that happened there locally. Founders Bank, things of that nature. And sometimes it's better just to do a name change, change to create a more unique name. Maybe now you operate in 3 states as compared to the first state you started operating in. So maybe now you need a name that kind of reflects that more national brand, or West Coast brand, or East Coast brand, or Central, America brand, whatever the case may be. But like I said, I just thought this was a really interesting study. I thought that it just kind of pointed out that there is trademark risk out there, and basically 1 in 5 banks share a similar name, which increases the likelihood of confusion among customers in the event of a shock to a similarly named bank. So just something to really consider out there in terms of risk mitigation, and how you could eventually be perceived out there in amongst your customers and amongst investors, things of that nature. So, but like I said, hopefully something good to think about. So, but anyway, if you like this episode, please make sure to like, share, and subscribe. Please remember we are on YouTube, Rumble, and all major podcast platforms. Please check out some of the other episodes from the channel. I think I've put up some really good content over the last year for people to check out. Also, remember, every Friday night we do a live stream on YouTube, and that is at 7 p.m. Eastern Standard Time. So if you haven't had a chance to check that out, please do so. And as always, if you have any comments, leave them down below. And I will be back seeing everybody real soon. Have a great week out there. See you later.